In this overview, we'll walk through the Validea Modified Permanent Portfolio, which is an investment portfolio designed to perform well in all different types of economic conditions by investing across various asset classes and by incorporating a trend-following overlay on top of the portfolio. The key fundamental investing insight here is this. Investors can build a portfolio that offers long-term growth, income, and protection from inflationary and deflationary environments using a combination of stocks, bonds, and gold. By adding in a trend-following overlay, we can further limit the drawdowns the portfolio is exposed to. At a high level, this permanent portfolio invests 25% of its assets in stocks, long-term treasury bonds, short-term treasury bonds, and gold. Our modified version will only invest in the assets that are currently in an uptrend among the four in the universe. If no assets are in an uptrend, the portfolio will invest 100% of its assets in short-term or intermediate-term bonds. The core concept of the permanent portfolio was developed by Harry Brown and written about in his book, Fail-Safe Investing, Lifelong Financial Security in 30 Minutes. From 1976 to 2016, a hypothetical permanent portfolio backtest produced a return of 8.65% annually with only a standard deviation of 7.2%. This is on the standard permanent portfolio. The investment thesis on the permanent portfolio is by using a combination of uncorrelated and different asset classes, you can help limit drawdowns and volatility, thus helping the investor following this type of strategy generate steady returns over time. By incorporating trend following, we can further enhance the returns of the permanent portfolio by removing asset classes that are in a downtrend and raising cash when none of the asset classes are performing well. Okay, let's take a look at the Validea Modified Permanent Portfolio in some detail. To start, this portfolio will hold the same asset classes as the regular permanent portfolio. So it will hold stocks for periods of growth and prosperity and declining inflation, gold for periods of high inflation, long-term bonds for periods when rates are falling or deflationary environments, and lastly, cash and short-term bonds, which are the safest asset, which help provide protection during recessions and depressions. Each of those four asset classes gets a 25% allocation in the portfolio. Our modified version, however, uses trend following to move in and out of asset classes that are in a downtrend. So once an asset class violates key moving averages, we have the ability to move out of that asset class and move to cash. And also, once the asset class reverts and an uptrend is established, the portfolio has the ability to move back into that specific asset class. The Validea Modified Permanent Portfolio takes advantage of the diversification benefits of the regular permanent portfolio and augments the returns and risk controls by incorporating trend following on top of each asset class.